Our next panel is on stimulating foreign investments in the Philippine energy sector. The session would be moderated by Sarah Fairhurst, partner, Lantau Group, Hong Kong. And the esteemed panelists in this session would be Mr. Yanis Boudjouher, CEO, ReEx Capital Asia, Singapore; Karim Garcia, Vice President, Business Development, Metro Pacific Investment Corporations, Philippines; William HSU, Managing Partner, Sustainability Capital, Hong Kong; and Mr. Ramon Esueta, Philippine Chamber of Commerce Industry. May I invite Sarah to kindly take dais and welcome her panelists.
Okay, first of all, why don't each of you introduce yourself and tell us just 1 minute on what it is that you do. Yanis, why don't you start?
Good afternoon, everyone. I'm Yanis from ReEx Capital Asia, an investment banking and consulting company based in Singapore and specialized in renewable energy and clean technologies and in Asia Pacific. So we work for project developers, helping them to make the projects bankable and raise capital. And we work with companies and investors to providing M&A advisory and financial advisory, financial due diligence. And the company was created 9 years ago and specialized in this Asia-Pacific region. And we have business in the Philippines and in other countries in the region.
Thank you, Yanis. Karim.
Hello, good afternoon. The crowds have thinned out. My name is
Fewer
Karim.
people to see our mistakes, Karim.
My name is Karim Garcia. I'm Vice President for Business Development at Metro Pacific Investments Corp. Metro Pacific is one of the leading infrastructure investment companies in the Philippines. Our core businesses are into toll roads, hospitals, water, and power. And we're beginning to get into rail and airports and other businesses. As some of you know, we won the Calax bid for 27 billion just recently. And we are looking to enter into not just baseload power, but smaller peaking mid-merit generation as well. Thank you.
Thanks, Karim. Ramon?
Yeah, good afternoon. Thank you, Sarah. Good afternoon to everybody. First, I'd like to thank the Philippine Group for inviting me again this afternoon. Last year, I moderated the opening session. I think moderating is an easier job than being a panelist. But anyway, just to give the audience an idea of where I'm coming from. I'm a technical person, an electrical engineer by education, when electrical engineering included even broadcasting and electronics and IT. And I started my career in the electric power industry as a corporate executive in equipment and service provider to the power industry. I somehow left the industry and transported myself to being an entrepreneur, a senior entrepreneur. Somehow I also still got exposed to technology and technology transfers. And for the last 15 years, I've been active in the chamber movement in the Philippines, promoting trade and investment across the seas, where I'm very active in the Committee on Power of the Philippine Chamber, as well as the head for the International Business Councils.
Oh, thank you. Sounds like an excellent group of people to have on our panel. So I'm going to kick off the first question with, is foreign investment actually needed? And if, as I suspect you will say, the answer is yes, why is it needed? Yanis, why don't you start?
I mean, first answer is investment is needed, whether domestic, coming from domestic or foreign sources. And I'm going to answer that question from a renewable energy angle because that's my business. And I was there during your presentation about the importance of having the right energy mix. And I agree that the right energy mix should include centralized power generation, but also decentralized power generation using local resources. So including fossil fuels, but also looking at geothermal, biomass, biogas, solar, wind, hydro. And that's the right balance between these resources and technologies that will make this energy mix fitting the requirement of the country and the right balance for the right customers and demand in that country. So there's not enough use of the natural resources here in the Philippines. So that's why I'm answering the question, saying we need more investment in that sector. And the second answer is basically local investors don't invest in renewable energy. They invest in fossil fuel, they invest in other things, oil and gas, etc., but not in renewable energy. So that's why we need foreign investors and foreign money, foreign capital, because they are interested in investing in renewable energy projects. And the last element of my answer is banks. And again, why do we need foreign investment? Because local banks are getting more and more familiar with that sector, with the renewable energy sector, but not there yet. Debt for construction financing is quite difficult to come by. So banks are getting there, but they are not there yet. So that's also a reason why we need foreign capital.
I think I may disagree with you that locals are not getting involved in renewable energies, but why don't we let the panelists answer that? Karim, that same question to you.
Yeah, so I'll agree with Yanis, but if you ask the Philippine Central Bank if foreign investment is needed, then they'll most probably say no, because the Philippines now has over 100 billion pesos in foreign reserves. The local banks are flush with cash and eager to lend to good projects. But, as Yanis said, investment in this country is very much needed, whether it's local or foreign. And it would be good to have foreign investment in the Philippines, no doubt, because foreign investment brings other things other than capital. It brings technology, brings know-how, it brings more employment. So, and it lifts the image of the Philippines globally. So I would say that is foreign investment absolutely needed? No, but would it be nice to have? I think there are more good aspects to say yes than no.
That's a very thoughtful answer. Ramon, everyone has got the easy answers.
I would
You have
agree with both of them.
Yeah.
I think I would say that maybe some years back, foreign investment would be really a necessity. But nowadays, if you think about the deposits, even with our central bank, like the SDA, where it earns very small amount, but a lot of Filipinos have put their money there. It's a mopping up operations of the central bank, but there's so much money there. But it's money that maybe Filipinos would not be willing to put at risk. So that's, I think, one difference. I also agree that the foreign investment is, I think, the deepest type of involvement doing business in any country other than just selling your products, just selling your services. When you're investment, you really bet big, and particularly if it's a big investment in a big way. So somehow, a lot of things happen when that foreign investment comes in, as was mentioned, technology transfer, even management systems are put in place. A lot of other things which really come into play because then the foreigner who invested would have to make sure that his operation or the business he went into would be successful. It also adds pressure to the Philippine government to maybe, in a way, restructure some of their policies, and in a way also the local business people benefit, because since we live in the country, sometimes most of my co-business people at the Philippine Chamber are gun shy about openly criticizing the Philippine government, although when we are among ourselves, we of course criticize it heavily.
Well, that's good to know. So, how do we compare with other Asian countries? Karim, would you like to comment on where the Philippines sits in relation to other Asian countries?
Well, before coming here, I did some quick research as far as FDI is concerned. And unfortunately, the Philippines is lagging with FDI. In terms of percent GDP, the Philippines FDI is only 1.12% of GDP. FDI is 1.12% of GDP, as compared to 2.26% in Indonesia, 2.35% in Thailand, 3.66% in Laos, 4% in Malaysia, and 6% in Vietnam, to name a few. And then I did some research also as to which countries are really investing in this country. And the largest investor to this country, if you can guess, is the British Virgin Islands. So a lot of shell companies out there. So if we take them out, the second largest is the US, and then Japan, and then the third was a surprise to me, but it's the Netherlands.
That's tax as well.
And then Singapore, South Korea, and then the Cayman Islands, and then Australia. So definitely the Philippines is lagging in foreign direct investments. And it's a pity because the economic performance of the Philippines is looking pretty good.
Oh, that's a good lead into my next question. So maybe Ramon and Karim, you could talk, being the locals here, about how the economic situation in the Philippines is panning out at the moment.
Let me just follow up the information given by Karim. He mentioned in terms of percentages, and I don't have the figures, but when you look at the absolute amounts, it's really staggering. Like, if I remember right, the FDI in the Philippines is around, what, 3 billion or 2 billion, whereas Indonesia would probably be 20 or 50. I forgot it, but it's 6 billion. Yeah. So in terms of magnitudes, it's multiples of anywhere between 2 to 10. So you can see that the Philippines somehow has been left behind in terms of foreign investment. In terms of the biggest investor, fortunately yesterday, I don't research it, but it just comes across me somehow. I was able to attend an EU seminar, and of course EU said that they have the biggest investment in the Philippines with 30%, Japan with 17%, and the US with 17%, and ASEAN and so on. But and the other thing which EU pointed out was that from 2013 to 2014, FDIs from Europe increased by 58%. And frankly, last year, since I became involved with the business councils in the chamber, we have been receiving a lot of delegations from many, many different countries, including countries like Belarus, South Africa, Kazakhstan. No, what I'm saying is, and I'm in a way proud of it, is that somehow the Philippines now is in the radar screen of many other countries. And many of the ambassadors pay courtesy call to us because they know that they will not be doing their job if they somehow not connect with the chamber. Not that the Philippines is growing and has good economic performance. In terms of credit rating, I think anybody can just go to the different sites and you will see S&P, Moody's, and so on. We have improved a lot, and you have to somehow give credit to the drive of the government for good governance.
Karim, do you have any additional points to add to that?
Yeah, so just on a quick summary of the Philippines' economic performance. For the first quarter of 2015, our GDP is down to 5.2%. And that's way below the 6.6% consensus. So I don't know if that's something to be worried about, but there were definitely lower government spending and lower exports. But consumption in this country is growing. We have a population of 100 million. Middle class is growing. So that's up 5.4% despite lower oil prices. The oil prices, what it's really affected is car sales. It grew up by 21% year on year. And the lower oil prices kept the CPI inflation down. The largest investments were in power, real estate, and manufacturing. And what they're forecasting is that the PPP projects of the government could add about 2% to GDP this coming year. Surprisingly, there's not a lot of growth from OFW remittances, but OFW still contributes to 20% of the GDP in this country. So thank God for the OFW people. And BPO industry contributed 6%. So that's a huge industry for us. And I think overall, the Philippine economy is still in track. And you wonder why FDI is still lagging. And maybe Yanis can talk a little bit about that.
Yes, I was actually going to ask Yanis, why don't we see more FDI here in the Philippines?
I mean, in Asia, to go back to your first question about how Philippines compare to other countries. I mean, there are issues in other countries as well, and different nature. But what I can tell is I'm a big fan of the Philippines, and but there's a discrepancy between the high tariffs. Everybody been here this morning and this afternoon. Everybody was saying, oh, that's the second highest tariffs in the region. So let's do business. But then if you look at the waterfall diagram from the high tariffs to what's in the pocket of investors, especially in US dollars or in euros, then there's a huge gap. And part of it is due to the process, the approval process, the permitting, the developers, and the time to get to get a project to the end. So land conversion, for example, is a huge issue because solar is a real property business. So you need land, so you need to convert land. We've seen land conversion cycle of 16 months just to convert the land, to use the land for solar business. The paperwork to get to the certificate of commerciality, and with new documents being required along the way. All the intermediaries, from barangays, the municipalities, local governments, also to get through that. The 60-40 rule. So everybody, when I mentioned 60-40, when we mentioned 60-40 rules, I mean everybody is saying, oh, but yeah, there are ways to deal with that. So everybody has a way to deal with the 60-40 rule, but at the end of the day, these ways of dealing with the 60-40 rules, assuming that they are legal, then impact the net are at the end of the day, because there's a bit of financial structuring. So at the end of the day, again, that's the net return into the pocket of the investor that's impacted negatively. So, concrete elements of answers why there's a discrepancy between the need and the willingness of foreign investors. Assuming that we need foreign investment into that country, there's a discrepancy between the results that we see.
Okay, so Karim and Ramon, you've heard a list of the foreigner telling you what the barriers are. Tell me, what can we do about it? Yeah, yes, comment, absolutely.
From a local perspective, when I started working, after 1 year, I was sent to the US for training. That was the only time I knew that the Philippines was an underdeveloped country. I was enjoying it here, I still enjoy it here. But somehow, we have a big sector in our population that really is not doing economically well. But anyway, so what I'm saying is I cannot comment on that except cite some sources. And I just so happen that I have some sources, which is the Global Competitiveness Report of the World Economic Forum. It cites the 5 most problematic factors for doing business in the Philippines. It mentioned, do we have any politician here? Anyway, it mentions
I think
corruption.
they've gone. I think you're okay.
It's corruption, inadequate supply of infrastructure, tax regulation, insufficient government bureaucracy, and tax rates. As a businessman in the Philippines, I can tell you, it's not that even for a local, it's not easy doing business in the Philippines. But there is also one thing I can tell you, it's profitable. So it's always gauging the risk and the perceived benefit. The difficulty is when we talk about, of course, investing in the power sector, it's a little rather long term. So you really have to be a little bit more discriminating with your numbers. And I think that is one difficulty when it comes to the infra project. But you can see that the locals, including Metro Pacific, the DMCI Group, TransAsia, they're putting their money where their mouth is. They, like in the case of DMCI, they're investing in 350 megawatt power plants in Calaca. They just put up 135 together with TransAsia. I'm sure Metro Pacific is looking at other different projects, isn't it? So when you look at it, there are many local companies who are really betting on the Philippines because they know it's profitable. And it's really a gauge of the risk you have, particularly, of course, when you're not a resident or not a citizen of the Philippines. But in many ways, to be frank with you, a lot of foreign companies here have made a lot of money in the Philippines. Look at the Kwok properties. I was in a forum when Malaysia sent a delegation here, and one of the Taipans in the Philippines said that Kwok invested, I don't know, that's $2 billion, and he can swear that it's now worth $6 billion. I mean, what I'm saying is they make their money. And of course, there are some risks, but somehow they've been able to mitigate that risk. If I were a consultant, I would not talk this way, of course. I would say, on the other hand, but being a local, where you bet your money, it's a fairly good bet. From an economic point of view, it's a fairly good bet because it's not a perfect market. When the economists discuss it, And they talk about the US, they talk about the other, like EU. There are no imperfections in those areas. It's very difficult to make money and to find that niche. In the Philippines, it's an imperfect market. So the economists will tell you, you will make money.
Thank you.
I think that's one of the best explanations I've heard yet about how you make money in the Philippines. Certainly, when I look at the energy sector in particular, I see that the locals are prepared to take risks that the foreigners are not. So when you have foreign investment competing with local investment, if the locals are prepared to take the risks, the foreigners are really being out-competed. So Karim, what are your thoughts on how we can improve the situation?
Yeah, so I second the motion with what Ramon said. The Philippines, maybe perhaps the reason why the Philippines is lagging in FDI is because we lack better infrastructure that the other countries can offer. Our power rates are high, but let me remind you that many of our neighboring countries subsidize their power rates, and they are beginning to see the demise of that policy is coming sooner rather than later. And so I think in terms of power pricing, other neighboring countries may start increasing their price as they lessen subsidies there. The good thing about the Philippines is, yes, we have a high price of power, but at least it's a true price of power. In terms of what foreigners look at that I think are sorely lacking in is policy from regulators that are put in place, that is clear, that is not open to interpretation, and the sanctity of contracts is very important in an investment, especially from abroad. And I agree with Ramon. I'm a Filipino, but it is so difficult to do business here. The frustration levels of doing business here are pretty high. Having said that, the reason why that's the case is because of the imperfection, the inefficiencies, and the flip side to that coin is, if you're willing to, and this is a message for the foreigners in the audience, if you're willing to take a little more risk, if you're willing to make business decisions and big business decisions with incomplete information, then there is good potential for you to make money in this country. But I hope that government policymakers realize that their decisions affect not just the Filipinos, but the FDI in this country. So it's so important for policymakers in this country to set clear guidelines in investment, not waver on those guidelines, and honor the sanctity of contracts.
So Yanis, you've heard the locals' perspective on how they can improve. What's your foreign perspective on what's needed?
Yeah, I mean, I agree. I fully agree with what has been said. I mean, few things. First, maybe there was, or there were too high expectations from new foreign investors into Philippines, probably due to a misunderstanding or the fact that it could seem easy to get into this market because everybody can speak good English and it's as you said, I mean, tariffs are not subsidized, so it looks transparent and. But the reality is when you try to do business, the reality is different. So I mean, working with a lot of investors, we've seen a shift from let's go to Philippines and make good money and develop a business. So from there to let's find a local partner and a trustable local partner. And so now everybody's trying to marry with a local partner and try to do business through a local partner, realizing that you need that to get through to the permitting process and everything. So I think it took some time to realize that from some foreign investors. Obviously, some investors were here, I mean, many years ago. So So maybe a misunderstanding and perception of the risk, and now we are getting into a reality check at the moment. But also there are tangible things that also negatively impact the appetite, like announcing the new feed-in tariff almost halfway through to the race of this solar race with the deadline in March next year. So announcing the 8.669 almost like a month ago, that's going to be the tariff, the feed-in tariff. That creates that damages basically the confidence. So that could be dealt easily with a proper regulation and a bit of thinking. So yeah, that's.
Okay, well, why don't we open it to the floor and see if there are any questions? Yes. Can we have that mic turned on, please?
Yeah, fine. I'm J.K. Mehta from the World Energy Council. It's more of an observation than a comment. When we talk of FDIs, generally the investors do a due diligence before investment on the issues of risk analysis of the investment, the process and procedural detail matters and delays involvement in getting done, expected ROI, and the predictable revenue stream through the life of the project. These are the things they would like to analyze before putting in the money. And they do relative comparison country to country and to find out. And what are the challenges? The challenges are the tariff, fluctuating tariff, the approvals required, you see the 34 department, 105 applications, the delays because the time and cost overruns happen when the delays are there. For setting a project of 6 months, you require 4 years to get the approval. It's not worth putting your money there. Then the regulatory issues, the uncertainty of the regulatory issues, which control your revenue stream, the market fluctuations which will affect during the life cycle of the project and initial stage of the project. Very important, what is missed is the law and order situation in the country, which will be looked at by the investor, the political stability of the government, and the comfort level with the local authorities to do the business. So these are issues investor would look at it, and he would like to compare it because he has his love is for money, return on investment. And it's not he trying to build up your country or my country. Wherever he gets a better returns, he puts some money there. So if we improve these situations, automatically FDI should come. And then what is the solution? If we talk of comfort levels, it is partnering with efficient, known organization in the country. Because that gives you the comfort level of moving, your application moves faster, your process goes faster. And finding the right partners. Functions and conferences like these with Power Electricity World and others give an opportunity for B2B meetings, understanding the industry. And I will support what Ramon said is that encourage more delegations to come to your country, let them meet your people, let them understand the business and get that reassured that yes, because he is risk averse. Unless you give the comfort level to the investor, they will not come here. Thank you.
We advise quite a number of foreign investors in the power sector who come, and all of those issues are the ones that they worry about, and I agree with you. But I think what we're hearing from Ramon and Karim, and what's really interesting, particularly here in the Philippines, which is different from some other countries in Asia, is that the locals are prepared to take those risks. And so the money is still there, it's just not coming from foreign money. So I have a question following on from that very good summary of what's needed. When will Philippine investors view the market the same way as foreign ones and do all of that due diligence and insist on that same level that the foreigners invest on? Or will they just continue to make higher returns from their higher risk?
Yeah, so let me take a crack at that. Since this is an energy conference, let me talk about the power situation in this country. So, red alert, according to the DOE, is defined as net power reserves less than contingency reserves. And in the first 2 weeks in April, we were in red alert, and the last 3 weeks in May, we were again in red alert for Luzon, and Visayas is short of power. Mindanao, in the long run, I think will be long power. But so you answer your question, why is it that a country with so much promise is always short for power? And I think the answer to that is what the gentleman mentioned, which is all the concerns of that gentleman that he mentioned needs to be addressed by the policymakers, by the politicians in this country. On top of that, you layer in the situation where, let's just face it, local businesses and large local business, like such as conglomerates, tend to have tend to be willing to take greater risks than the foreigners for given returns. And then on top of that, you layer in the very tight and aggressive competition in this country for assets and the development of such assets. And so when you layer all that in, what happens is the local players who have the capital to do it are willing to invest for higher risk, low return. So they end up investing in such projects, and the foreigners who are not willing to take as much risk and require a higher hurdle rate end up bowing out.
Thanks, Karim. We've just got a couple minutes left. I'll leave Ramon with the last word because he is from the Chamber of Commerce after all.
Yeah, I agree 100% with all you have said. Those are all valid concerns, and I think we are conscious of, and I agree the government has to do something about it. But we all don't, frankly, we don't all need to go to the very, very big projects. There can be some soft landing projects you can get into. An example is when you look at the big power projects here in the Philippines, and you look at the power industry in the other countries, we don't have the same ecosystem that they do in the advanced countries. So what happens is availability, efficiency, reliability suffers. So ERC came up with Executive Order number 17. They're going to impose and they're going to start benchmarking. So that presents an opportunity for even operators who have very good handle on technology of operating power plants. Like in the case of CMC, when I talk with them, they're putting up a factory in Clark for their product to service the needs of the coal plants here in the Philippines. So there are many other, I feel, support services or support technologies or support equipment that can be used to service the power industry, and I feel you can also make a lot of money. But going back, those are valid concerns, and I share Yarin's opinion that
I think we have one more question coming from here.
One quick rejoinder. When you mentioned why the locals take more risk than the FDIs, the reason is it's a known terrain. They know the business, they know the rules of the game. And it's like walking a marshy land. If you know the place, you can hop through it. A stranger will not put a step inside it. And that's why I suggested that partner with the locals and you'll walk through this thing and make profits. You walk alone, you are in the mess. So this is what my suggestion is, that look for good partners, walk along, and you'll succeed. That's it.
Yeah, I think that the reverse situation would be quite scary.
Yeah.
But let me just say that to the foreigners who are thinking of investing in this country, don't just look at your hurdle rate and say, oh, I'm going to make only a 10% IRR, so forget the Philippines, I'll just put my money in Thailand or Malaysia or whatever. You have to take a long-term view of your investment in this country. Think we are a country of 100 million population, and we're not like Europe where we have negative growth rate in terms of population. We're growing Filipinos are a little promiscuous. We're growing at 2-3% population every year, no? So you need to plant your flag in the country, and I can guarantee you that it won't be easy, but if you take a long-term view, you want to be in the Philippines to serve a population of 100 million people growing at 3%, and the middle class is growing.
I think now that we've covered promiscuous, we're probably well on the way to wrapping up, and I'm getting the sign from the guy over there. So I would like to thank you all very much for your contribution. That was an excellent panel. Thank you very much.
Thank you.